Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a value just under $110,000. That's made up of the $58,432 in my stake portfolio and then the $51,227 in my Vanguard portfolio. Overall, it's been a great recent time for investors, and as you can see, even in the last day, just my stake portfolio alone is up $680. So it's been a great time as lots of markets have bounced back. Some of mine, such as Microsoft, have done exceptionally well recently, but if we just have a look at the overall S&P 500 and look at the last week, you can see things are up nearly 3%. Even in the last month, things are now up around 4%. And if you were buying during these dips here, you've been doing very well for yourself. Overall, some of my key holdings that have been doing well that I'll speak on today are the likes of Microsoft. If we look at Microsoft in the last week, it's up 12% alone. In the last month, it's up 16%, as the stock has really rebounded. As you can see, it was trading close to even the $350 a share at one point, and has now shot all the way back up to $435. This is a major holding in my portfolio, and I have around $6,000 in equity, and I'm up close to 40% now. Overall, the stock has traded pretty volatile over recent times, but it is still up 7% in the last year, and in the last 5 years it's up 135%, so great returns for anyone who's held it long term. Today I wanted to go through and speak about my portfolio, what I've been doing when the dip was happening, and what my plan is going forward, as I aim to break that $110,000 mark in the coming weeks. Okay, first we'll start with my stake portfolio. If we go to the first one, we can have a look at Apple. Apple is a stock that's actually a little bit down now. The stock had really rebounded and done quite well, but there's been a little bit of a pullback, but it's still back in the green a lot compared to where it was, trading at around $175 a share. I only have $1,000 in Apple because I sold out a lot of my position, and I'm around 27% in the green with an average share price of $161 per share. Next, if we have a look, is Amazon. This is a position I've been growing, and if we have a look at the last week, it's pretty flat. It had this period where it really dipped back down to the 180s, but it's now back up to $190 a share. Overall, my average share price is $196, so still a little bit above, but that's because I've been buying in recently. I was buying in when the stock first started dipping. I bought a big share at around $211, $213, and it just continued to dip. So it was a bit of bad timing. I could have invested more money here, and I did try to, but again, you can't time the market. I'm only down 3% currently on the position, so I'm not too upset about that, but I think long term it will be good. Overall, Amazon did put out their earnings. It was hit with a bit of mixed opinion. They are still growing in spaces like their cloud side of the business, but there was a little bit of, didn't get as much traction as like Microsoft as an example. But I still believe long term, these tariff effects and things like that are really weighing into what this Amazon share price is doing at the moment. And I think long term, this can hopefully be sorted out. Again, I have a 10, 15, 20 year investment horizon ahead of me. So I have ages to invest in companies that I believe in long term. I only keep around 25% of my portfolio in individual stocks. The majority is in ETFs. So with these stocks, I don't mind taking a bit more risk and buying into companies that I think long term will outperform. The next stock is Costco. So I have been a Costco shareholder for a while now. I even visited Costco today. I'm a Costco member. I think they provide a great service and products. I have around $1,350 in equity. Used to be more. I sold some of it, locked in some really good gains, and allocated it elsewhere where there was a bit more of a dip. You can see I'm up 75% in my Costco position with an average share price of around $574 a share. Costco is now back over $1,000, and it's up 4% this last month, and it's up 2.75% in the last week. So not bad. It's even up 13% in the last 6 months, while many stocks have traded down or flat. So Costco's been a great holding, 35% up in the year. It just continues to perform. Yes, it trades at a very high PE ratio, but I think it's a great business. It's got a great business model. I've mentioned before that I think Costco and Microsoft have the best business models out of the businesses that I'm invested in individually. In terms of they're not stuck to any specific products. They can kind of get in and get out whatever's selling. Globally, they're doing great here in Australia and Asia, obviously in the US. I think it's a great business. So it's something that I plan on holding, again, longer term. I don't see myself selling this little position anytime soon. Next is Google. So Google's, like Amazon, is a position that I've been growing. The stock has recently taken a bit of a hit again. You can see it's up 1.38% in the last week, and it's up 8% in the last month. But even if you look at the last 6 months, it is down still quite drastically compared to the $205 it was trading at before. Overall, my average share price is 164, so I'm pretty much flat completely on Google at the moment. So again, I think long term, this will be a company that does great things. I think they had strong earnings. I think Gemini is just continuing to get better. They're still seeing growth in search. Ads are still doing good. Obviously, cloud, Google Cloud is doing quite well as well. So I think it's a key indicator that this business will still have potential going forward. And it is trading at a much bigger discount than many of its other big tech competitors. So I think if you're an investor in big tech, it's definitely a stock that you should look at. Doesn't mean you have to invest. Obviously, do your own research. This isn't investment advice. But I think long-term, Alphabet will be a company that really does pay strong dividends for me going forward. Next, we have Microsoft. I briefly mentioned Microsoft at the start. They put out some earnings that were very, very strong. The stock had a very rough year. So whilst many stocks and the S&P had done great, if you take out this last little run-up it had, the stock had done really poorly in the last year. It really trailed behind the market, especially compared to other big tech stocks. And it hadn't been a good investment for me. I had a very good time with this stock in 2023. It helped carry my portfolio, had great returns then. Traded up, and you can see around start of 24 to now it's been pretty flat. But it's nice to see there's been a bit of a rebound in it. I still believe in Microsoft going forward. That's why I didn't sell any of my stock. And I'm still up quite strong overall with the position. So I think Microsoft will continue to be a key holding in my portfolios. And I plan to hold this going forward. And I'll provide any updates if I do sell out of anything. Next is VOO. So this tracks the S&P 500. It's my biggest holding in this portfolio at around 17,000 USD. And I'm up around 23%, 24%. Reason that's a bit lower is because I've been dollar cost averaging into this for years, with an average share price of $420 a share. And if you look at the last year, you can see it's up around 11%, which is pretty good historically in terms of historical returns. And we've had some great years previously of around 18% on average. So it's been really, really good years on the market. So having a bit of a rough start to a year is to be expected. It's pretty flat in the last 6 months. And then if we have a look at the last month, it's climbed up a little bit. So a reason I keep such a big chunk of my portfolios in ETFs is because I don't think I'm some amazing investor that can time the market or find specific stocks. I don't have as much time to allocate to looking into that. So I do pick stocks that I enjoy, their business, their product. I think their business is good, but the majority of my portfolio still is in broad market tracking ETFs. Speaking of ETFs, we can look at my Vanguard account, and you can see this has successfully broke $50,000, which was a nice reward for myself. Now both my portfolios are over $50,000. The next goal is obviously to get them to $60,000 each, which would be a nice another goal to tick off. As I get closer and closer to building my portfolio to $150,000, that's the total big next goal. But as you can see, VLC, so I have around $10,000 in VLC. This is tracks the top companies in Australia. That's sitting around $82 a share. This was trading at around $79 not too long ago. I did sell $2,000 of it and put it into VGS. So VGS is an international shares ETF. So this tracks 1,500 companies globally with a heavy weighting towards the US, carrying a lot of the big companies that I already own, like Apple, Microsoft, Amazon, and then others like Nvidia in there as well. And that's traded up. It was in the 120s, and now it's back up to the 133s, still off the 140 highs that it was on previously, but they've now totally got over $40,000 in that position. So Again, these are growing and becoming bigger and bigger positions. And as they grow, I hope to get that snowball effect. Any dividends I get through these portfolios, I reinvest right back into them, so I can continue this growth. And it's very nice that I nearly hit that $110,000 mark, as I kind of cleared that $100,000 mark now. Even if there's a big market downturn, I should still be safe. So if we have a look at my Excel spreadsheet, this kind of just shows it a little bit better, how things are weighted. So you can see in my American portfolio, VOO is my biggest. It's sitting around 46%. The goal is to keep it around 50%, so it is a bit underweighted at the moment. And then if we have a look at my Australian portfolio, you can see 80% is in VGS and 20% is in VLC. So pretty happy with the weightings, how they're looking. I update these graphs at the end of every month, so they haven't been updated since the market's been rallied, because as you can see, everything is up since then. But you can kind of just shows the trajectory of my portfolios over time. Everything's kind of been slow and steady up and to the right, which is what you want to see as an investor, because sometimes you're just dollar cost averaging into your portfolio and you can't really see the whole long-term effect of it. And this kind of just shows you, even if it's a little bit of money, even back when I wasn't getting paid that much money back in 2021, 2022, I was still dollar cost averaging and buying into positions that I believed in. And because of that, that's what's helped me with this growth. And if I can continue this up, then I should be able to grow a strong, respectable portfolio for myself going forward. I am still 22 years old, so if I can continue this momentum that I'm doing now, I should be able to hit $1 million portfolio in the upcoming decade, or even so, roughly, who knows. And that would be quite a nice goal, because you get a lot of passive income if that's something I wanted to structure my portfolio towards, or I could just keep focusing on capital gains, but it does give me that flexibility, and hopefully I can use that to build wealth. If we have a look at my dividends as well, like what we were speaking on, you can see last month was my biggest dividend month ever. So I got $500 in dividends in my Vanguard account, and I got it close to $50 in my stake account. So if we have a look at the charts as well, you can see over time, things are kind of doing the same thing. It's slowly up and to the right. I have pivoted my stake portfolio away from dividends and kind of just with a major focus on capital gains. The reason being is I'm not a dividend investor. I always say this. All dividends I get, I reinvest back into my portfolio. So I don't mind getting dividends, but again, there's not real much of a point in me. I'm not going to take them out or anything like that. So I'm just going to hopefully use it as a snowball to continue to grow my portfolios. Overall, you can see my total Vanguard dividend is now over $2,000, and my total stake is getting closer to $700, and that's USD. So it's been quite good for me, and I plan to reinvest all of the dividends. My goal for 2025 was to get around $2,000 in dividends. If I continue to grow my portfolios, I should hopefully be able to hit that. But stay tuned. I'll keep updating them. I always do at the end of every single month on how I'm tracking towards those goals. This was just a bit of an update on how my portfolios were doing. Obviously, with the recent big tech earnings and the beats that's been happening, such as with Microsoft and even Google and Amazon to an extent, it has been great for my portfolio as my stake portfolio gets closer and closer to $60,000. But thank you for tuning in. Feel free to share how your portfolios are doing in the comments, and I'll do another update next week. Cheers.